All right, traders, welcome to today's recap. This will be very quickly because we have a member webinar coming up at 5 o'clock. And if you wish to be to view the webinar, you have to be a member of Tribeca Trade Group. I just wanted to mention that to you, and then I will send out the link. But we do webinars and things like this for members as a uh, special feature that we do because we do spend like an hour and a half, sometimes 2 hours on these webinars where we go over everything about the market webs. And so I just wanted to mention that you could still get involved in that if you want to sign up. You could even sign up for like a month and just see what it's all about and kind of go from there. I think that's the price. That price alone is still worthy of we charge. What do we charge now? 130 a month or something like that. So, that's well worth the cost of the webinar alone. And by the way, risk disclaimer in front of you. Everything that we're going through in this video is for information purposes, only, not giving any advice. Please read the risk disclaimer there. So, very nice day for the market. Little bit of profit taking as the day wore on. Qs ended up 1.2%. I think at one point the Qs were up about 1.5% for the day. So, again, you kind of have to put these things in perspective. I get it. Sometimes retail traders they just want to see the market like keep going higher and so forth. We all want that. But I think at some point you just have to be a little bit realistic too of how nice of a day Friday was. So adding on another 1.2% for the Qs, that's very good. IWM did not fare as well. That gave back about 0.5% over the session. Again, you could see this, that the Qs still went up over the session by 10 basis points from the gap up. But, again, not very easy dealing with the gap ups. I mean, luckily the market gave us a lot of signals, as the week was wrapping up. And, most of the things that I went long, ended up doing very well. And, that's why when we have a gap up after several days, my strategy is to just manage my current positions, take profits, and then if I really want to add something else, then I will look to do so. But it's more of like a management type day where I'm taking profit. And that's basically enough. And here's my trade blotter for the day. You could see I sold some NVIDIA at 148. I'm still holding a little bit of that. I sold some PCOR, which was a trade that I was holding on to for a little more than probably about 2 weeks at this point. The only thing I did was I added a starter in QS, which, I've liked what clean energy is doing here to start the year. I think there might be a little bit more of an emphasis. Again, doesn't mean all clean energy. It just means, some areas of clean energy. CEG which was a real nice winner for me. I took this off, measure you're right into the VPOC up here, right? I mentioned GEV was kind of my trade of the day. This, look at this. We went over this in detail on Friday, I believe. We also talked about this, but look at the high volatility that is mentioned here in our MarketWebs indicator. Again, we'll be going over that in the webinar, but look at the launch higher. Very nice gap up. We'll see if it holds it. So I took some profits into that, in GEV at 373. And my plan is if it kind of sits back and fills back at this 355, then I'll look to add back. That's the whole that's half the reason to take targets, is to remain flexible and to be nimble on the tape, to kind of say, hey, I'm putting some money in my pocket, and then if it happens to come in a little bit, because trades do that, then I can add back, and I do like that. I like this theme going forward: nat gas and alternative energy, nuclear energy, that type of thing. IBKR hit another target in this name today too. Rocket Labs. Again, some of these names are very whippy. So if you're not taking targets on like some of the stuff that's extremely speculative, right? Some of the stuff they don't even make any money, or I'm not just saying Rocket Labs, but I'm saying a bunch of different names like Oklo, for instance. Oklo doesn't make any money, right? So if you're just riding this, I give you a lot of credit because it's worked the last couple of days, but this is really, really speculative stuff. And, putting some money in your pocket so that you can, live to fight another day and accumulate money, I think is very important in some of these names. I'm just inserting my opinion here. Overall, for the overall market, I just wanted to go through this because I thought that this was interesting. I talked about this in Substack earlier, but we did hit some resistance. Now, again, this has been a real nice move the last couple of days. But a logical place for a pause is at 527.27. Again, I'm not saying that's the end of the move this week or anything like that. I'm just saying you got to know where your resistance is, right? And that helps a lot in the short term. And then you can kind of regroup a little bit. And even the Qs regrouped a little bit after hitting that resistance right around 11 o'clock this morning, right? So that's that. SPY. Ba, 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 ba. SPY, oops, I don't want the weekly chart, I want the daily chart. Again, kind of stalled a little bit at that 20-day moving average. The bullish 80% rule is in effect, looking for a move through the value area. Again, we'll talk about that in the webinar, right? There's your there would be the about another 1.9%. Again, that can happen at any time by the end of the month, as long as price stays inside the value area. And then IWM stalled today. Again, it's been tough. I'm just going to bring up this one thing because I see everybody talking about this, and I'm just going to make a point here, right? Yes, yields are, TLT was down again today. Again, my thought is gradual moves are not going to upset the apple cart that much. Bigger moves are, but it's amazing. Everybody seems to be fixated all of a sudden because they hear it in financial media or social media that, oh my God, rates go higher. That means the market is going to go down, right? Everybody is saying that. And I'm astounded at how many people are saying this. A couple of weeks ago, when I said, hey, the dollar is going up and rates are going up, that doesn't look great. Nobody said a peep. But now everybody's telling me on Twitter or X, whatever you want to call it, that when rates go higher, that means equities are going to go down, right? I don't know where these folks come up with this stuff, right? That's not always how it works, right? There's a lot of different factors in the market, and it's not just, and again, I'm sorry to say, but I don't want to say novice traders, but younger traders, they think this. They're like, oh, because ABC happens, that means XYZ, right? That's not a given. Never think, in my opinion, never think that. The market is much more complicated than that. If you think that that's always going to happen, that's how people lose a lot of money. And it doesn't just matter with interest rates. It can matter with anything. But younger traders, they love these relationships because they feel like they can get warm and cozy. Like if this happens, then that happens. That's not the only thing that happened that's going on in the market. So please, and I'm not saying that I like the move in interest rates. I've said this for a while, but you got to get over just these simple relationships because the market is much more complicated than that. I hate to break it to you. All right. So anyway, big move by semis today, right? And Jensen is going to be speaking later today. That's a nice bump out of the value area. Again, did close on the highs, but it's a big move today, up 3.3%. Very nice. As I said, a nice day for me. Even though I put together a watch list every weekend, it just wasn't these names weren't something on the gap up that I wanted to really chase today. So again, this did well today and will be prepared for the rest of the week. There's also could be, in regards to the profit taking, it could be that because there's a lot of events this week. Look at how much data we're getting. Tomorrow we're going to get JOLTS jobs openings. At 10 o'clock, we're also going to get the ISM services, right? So what's the difference between, let's say, ISM services or ISM data versus GDP? Well, this is economics 101. If you've taken a basic college class in macroeconomics, you know that GDP is a lagging. You hear about leading indicators, coincident indicators, and lagging indicators. GDP is a lagging indicator. It tells you what happened 6 months or 3 months ago, 6 months ago. ISM is a leading indicator. So I put that much more important, even though it doesn't get as much headlines, but that is something that will tell you give you a little bit of a glimpse about how the economy is running. They're looking for a 53.5 for this. Prices paid 57.5. So, and again, services is more important than manufacturing. Then don't forget on Friday, we're going to get, we're also going to get the Fed meeting minutes. And so that's Wednesday. Thursday we have off. And then Friday, we're going to get a jobs report. So that could be why the market is a little bit wanting to take some profits into a couple days of gains. Also note, we had a 3-year bond auction today. You're also going to get a 10-year and a third. Speaking of bonds, you're going to get 2 more bond auctions this week. So again, I'm not saying anything, positive about bonds here. All I'm saying is just be aware that that's not how it, that's when everybody, especially when everybody thinks something, right? Remember the Santa Claus rally. Oh, the Santa Claus rally. When everybody's talking about the same thing, a lot of times it doesn't work. All right, so just be mindful of that. I'm going to end the video here. Really nice day of trading. Some of the trades that we set up last week worked really well. So that's it for today's video, and hope to see you in the webinar.